Alrighty. Good morning, good afternoon, and good evening. It's Doc after Juneteenth. It's our second year of this holiday. And people are still not exactly grasping what's going on there, but, you know, it's a day off, and that's kind of neat. So, here we go. Dollar looking kind of chill from yesterday, or I guess that's Friday right there on it. There's Friday, and you can see over in J4X right there. It's just been drifting sideways down. You can see the green line has been underneath. You can see our work went into the sell here, and it's pushing up at the moment on the daily. On a weekly basis, it closed in a weekly buy a couple weeks ago. Not sure why that is still in there like that. It should be showing us that. There we are. And get rid of the little cutie dot there, remove. And you can see it's still in the weekly buy for 3 weeks and trying to bounce back up again. We've seen currency pairs, you know, with the way the markets, the equity markets and the bond markets have been moving. We've seen equity, bond, and the energy markets all falling down, you know, losing direction. And we saw the same thing with gold. You know, there was pressure on it, and just recently they've perked up. That's gold and silver. And we see, you know, in others are moving in an upwardly direction. And then we see at the same time, we see oil had dropped last week and has rebounded. You know, we've seen that action. And the stock markets were down last week, but they did try to rally back at the end of the week and so forth, and that was pretty good. Still minus for the week, about 5-6%, depending on the three major products there. And that has been part of the recipe of it all, really. In other words, you know, they think that, hey, Robin, how you doing? They think that there's no recession coming. That's Mr. Biden was saying that yesterday. They talked to him on the beach. He was walking with his granddaughter and his daughter, and it was like, no recession, don't worry. And so then, you know, there's no, I think, how did he say it? He said it like, there's no reason to believe that there's a recession coming. I think that's how he said it. There's no reason to believe. Okay, sure. You know, last quarter, we were a minus. This quarter, we're in a minus. So that's usually the rule of a recession. And we're, what are we? It's June 21st. We're out of the Juneteenth. And so let me think. 9 days? So in 9 days, the quarter will be over. The second quarter will be over. It's a 30. Is it a 30? Yeah, June is 30 days. So would we have April, May, and June is the second quarter, since January, February, and March is the first quarter, and that was a minus. And here we are, 9 days away from the end of it. And right now, the Federal Reserve is predicting a zero growth. Economists, to a great extent, that I follow, you know, because they are accurate. That's the only reason I would follow any of them. Is that they show that we're at that same situation again, where the economy is below zero at the moment. So we have to assume that we are seeing a recession, and they're lifting the stock market up from it today. I mean, that's not too bad. I mean, you know, we have you know, a couple of percentage points up. I think we're a percentage up, 1%, something like that. Whereas we were down almost 6% last week. By, you know, if you average all three stock indices, the Dow Jones Industrial Average and the S&P 500 and the Tech 100 or Nasdaq QQQ, whatever you want to call it, they were all pretty much in the 5.5 to 6% area. So just a little under 6%. And you know, today we can just give you a quick look at it. I mean, we can do more than that, but here it is. You can see it's up 60 points almost. The S&P 500, which was down over 200 points last week. The Nasdaq was down 500 points last week. and it's up 187. So they're doing a nice little bounce. You're getting your like little 1/3 thing going on, And then the Dow Jones Industrial Average, which is up, you see right there, 436 points at the moment, was down about 1,500 points last week. So we're seeing a nice little bounce. We were expecting that. Word was out that the expiration was going to create a short-term short squeeze. So it meant that there were hedge funds that had to come in and buy some stock, to flatten themselves out. So this is no surprise. We're seeing a little push on the upside here today. We'll see how it goes over the next couple of days. I think as we go over to here real quick, we're going to, you can see here's the S&P 5. This is the NASDAQ. This is the Tech 100. You can see it's trying to close in a buy. That is yesterday and today. The electronic market was functioning on these things, but no real weekly move yet. And then same thing with the S&P 500 right there. It's trying to do the same exact thing. They're showing some strength in there. When they finally combine these two together, that's what they usually do with a holiday here in the States. But the weekly is still, again, fighting not to get into the buy. And then finally looking at the Dow Jones Industrial Average right there. Same situation, yesterday and today is those two lines showing a volatility. Of course there would be, since there was nobody really trading it here in the States. And you can see it's trying to lift up. So over the next couple of days, that should clean itself out, and we'll see if they lift themselves up or roll back over again. Especially being in a sell for the last couple of weeks. All right, back to the currencies. So dollar was being, let's say the euro against the dollar this morning. You see here the euro has been making some gains against the dollar for the last 4 days. You can see we are in a weekly buy. It's just flirting, hanging on the edge on the zero line. And you can see there's your weekly buy signal, and there's your daily. So we're seeing some buying. I guess they're calming down. Mr. Powell does speak today, but there's like 2 or 3 Fed governors that do speak today. But I don't know if they can really say anything more than what they've already said, and that is that, more than likely there'll be a reduction in it'll be an increase in the interest rates, and allegedly a tightening, what they like to call QT, which is quantitative tightening. So they're thinking in that fashion. So I don't know how they can, they're going to be speaking, Powell's going to be speaking in front of Congress, and a couple of the governors are going to be being interviewed. And so I'm not sure if they can really say anything more than we already know. That is, we're kind of on the edge of a recession, if not in a recession, and interest rates need to rise to slow down the inflation. After that, some of them might whisper things like, don't take us too serious about QT. Or maybe they'll say, yeah, we're going to get crazy with QT. I don't know. We'll see. And the end result is it's man-made. It's politically made at this point, so it doesn't really matter. Just, if they would just stop spending money, it would be a nice thing. Thank goodness for PayPal and Venmo and so forth, or we'd be using wheelbarrows to pay for things. All right, from there, let's jump over to the Swiss franc right there, and let's put this up over on. Let's just show you the euro on the J4X right there. There's the euro. Same thing with the greens and so forth, and the strength. And then let's show you the dollar Swiss pairs trade right there. Same thing with the pressure down. The pressure down, as you can see right there. See that pressure, but it's been really flat the last couple days. It doesn't really seem to have any real conviction at the moment. But you can see this. It's trying to climb back up into the buy. The weekly is only been in a weekly sell for 3 weeks. Not too bad. And it's gone totally the opposite direction. That closed in a weekly buy back there. And then we went right in a weekly sell again last week. So we got a weekly buy there. There we are. And now we've closed back into the weekly sell last week. There. And so that's where we are. It's been an interesting move there. That bounce is kind of interesting. When you look at the Swiss, it's like a big long A down. This is like the A right here. So we can move this over just a little bit like that to reflect it. There we are. So this is like the A down after like a 5-year high or something of that nature, and then a B up that almost touches this, and now they're pressing it down. And if it wasn't for this daily thing doing that, it's flirting with a daily buy at the moment. And the weekly, you can see just right next to it and down below it, is trying to lift up just as well. It hasn't pierced the zero line yet, but the daily has. And I guess, again, maybe they're just going to vacillate. It's going to be like the summery months, and people are kind of lackadaisical about making any particular trades. I heard one money manager this morning say that, he's starting to buy, quality companies. It's going to be choppy. They won't. It's not the bottom, but we're going to step in and start to buy because we have the capital. And they all have the capital, so that's the answer there. And they're paid. That's what they're paid to do. They're paid to be invested. So they have to spend some money somewhere, and so they're stock picking, hoping they're picking the right stocks. And that's kind of the way the currencies look in many ways. It seems like when we scrunch this up, let's do it on the J4X. I like the scrunching of J4X usually, like that. And when we go back, into say a weekly, and see when the last time it was up in this territory, it was back in November of 2019. Since it played that area, so that's a 3-year high. And you can see it also became a very strong resistance. Well, there's 2017. It just bounced against it, would hit it, and fall back down again. I guess that's the 2016. And that's that seems to be the top in many ways across. And it's just flirting with that now. And that is where they disconnected it from the euro that day, that week. That was wild. And so I kind of think that we're probably at the top end. My question mark in my voice is, you have recession, you have inflation, and so you have interest rates rising everywhere on the planet. They may be very minuscule in some places, but here in the States we did 3 quarters, and there's serious talk of another 3 quarters. So that alone is a classic old fundamental that has to be respected, that interest rates will have some effect on these products, which is kind of nice to actually see fundamentals be fundamental. How nice of it to be fundamental. All right, there's the daily again. I'll shrink it back down again, and from there we'll jump over to the cable. And cable's been acting kind of firm, but again dragging along in this long weekly sell. As you can see, let's see if we do this. We'll move this over a little bit. You can see it on the chart and tighten it up a little bit. You can see we've been in that weekly sell since right there. There we are. And so we're in that weekly sell trend at the moment. Trying to sell. You try to sell shorts when the daily goes into a sell. You try to catch that and ride it, just to take find a profit out of it and take it off, because that's what it's telling you. We saw a statistic over the weekend where markets don't rally more than 15% of the time on a move. So in other words, 85% of the time you want to take your profits as fast as you can. It only allows you to make more money in the end. From there, we go over to the Turkish lira. Let's see, now that the week is really rolling along, let's see what the Turkish lira is up to. We'll take a look at it through the eyes of the dollar Turkish lira pairs trade right there. Put that up on here. there. So we're playing with that 1735 area. Remember, 18 is the thing that made it get wonky. It's a monkey. Let's show you that on J4X going back. That's it right there. It marched its way up to the 18, and they implemented those free puts. Have not seen any conversation about it in a long time, so I'm figuring that something went wrong with it in the end. In other words, they took them away. They found another way of taking money from Peter to pay Paul. You know, that classic taking money out of one pocket and putting in the other. So in other words, they gave you free puts, and then obviously they did something to do the opposite, that put pressure on us. So, all right. Now we are back up into that territory. What will be their second trick pony that they will do? I don't know. We will find out. Now, over here, you can see on Chicago Quant, we've been in a weekly buy since all the way back into here. It's just, it just refuses to find any way to oscillate. At least the euro showed much more trading and more interesting action. But here, it just, there were times where it gets into a buy and doesn't, goes into a sell just like for one day and then goes right back into a buy again. And then does it again and again. Let's widen that out for you. I think we'll widen all of them a little bit, right there. There we are. Yeah, so it goes into a sell. Matter of fact, I don't think it can go into sell there, can it? Because it was a red and a green. So it stays in the buy from here all the way up to maybe right there. That's the sell. And let's go like that. There you go. Let's change that color a little bit. And then it went into a buy again and hasn't let go. It just has not let go. And it's been in that long buy. So whatever they did, obviously the dollar traders didn't trust it as much. I think in many ways there's like two type of investors in this product, the Turkish lira. You have it right here. You have the Turkish lira and the dollar, and I think that's more of like an investment of the currency itself. And then you have the Turkish lira and the euro and the Turkish lira, which seems to be like a real currency in many ways more. It's because it's local. European Union is all around the Turkish economy and country. So it really makes it something that has to be used on a fundamental level, which is kind of unique. Look at that today. Wow, that's an interesting pop. Got up to 1873. Took out the high there of 1865. It's backed off, of course, but obviously there's something very clear going on that says we're in trouble when it comes to this product. It's losing its. It has lost its calm demure of the last 5.5 months. It was very nice to see it lock in and stay in a nice tight range, and reduce the inflation, or let's put it this way, the beginning of a reduction of inflation. Ever since they announced their inflation was like 150%, it has been a real pressure point. I guess they'd have to raise rates, and I guess they're not going to do something like that. And so when they don't do something like that, then money gets nervous and says, I don't think I want to be there. And that's usually the way it works. And so you can see here the euro Turkish lira is much more active, does a lot more interesting trading things, and because again it's used as a fundamental compared to the American buying and selling with the dollar Turkish lira. All right, from there we drift over. It's quiet today. Nobody has anything to say. That's interesting. Real quiet day. I know Janos says that usually when he's around, he pushes a button or two and we get more people in. I don't I don't think, and you can see it when we see the replay of the webinars. There's been more people in there watching it, but right now it seems like doesn't seem like anybody's out there. Just me and you, Robin. It seems like. All right. From there, we jump over to the Canadian. And that was kind of interesting. It did take out that high that we talked about last week. It did that on Friday, I think it was. Yeah, Friday. Friday they took it out the high. Made a new high, took that out. And now we're starting to roll over here. And we just got into a weekly buy finally after this explosive week where we were in the weekly, I guess we were in the weekly buy half that week. And, just at least the daily caught the action. It knew that there was pressure on the upside. And the weekly had to take some time to get to it to explain it. But it did. And that overall long-term lethargic type action. Oh, there we go. Was it Happy Summer? Yeah, it is, isn't it? Hey, that's a great picture of you and Pearl and the kids. That's a real good Father's Day picture. That's something. Oh, maybe that's why it was confusing this year. Father's Day and Juneteenth at the same time. Maybe that's why it felt so confusing. It was like the way Sukkot was, or not Sukkot, Shavuot. Way too much. It was a Saturday and then Sunday and Monday all combined together. Boy, that made it very busy. Ooh, you said something and they blocked that out, whatever that was. Terrific time. Yeah, looked like everybody looked happy too in the picture. That's good. Now you can see here. What else can I say? Oh, yeah, so the Canadian is trying to roll over again, and I guess what we're seeing too. Let's go over to the oil market. Oil is here's oil. That's not oil. Here is oil. There's the August oil, and it's trying to lift up. It's trying, as we say it, and we're in the weekly sell from last week. So let's see if that's a short-lived adventure. Let's see how it's been. And we have seen here over since December, we've been in a weekly buy all the way to April, went into a sell, went back into a weekly buy in the middle of April in the $100 area. It ran to $120. And now we're back into a sell again. And let's see if that has more than just a 1 week life in it or 2 week life in it, that type of thing. And you can see here the daily not really acting very well, but the Canadian's showing a little strength here this morning, so maybe oil will turn back up again. Now from there we go over and look at gold. And there's the gold. And gold is moving down, and we're in the weekly buy from last week. And is that it there? It's right there, I guess. And we're in the weekly buy from last week, and at the same time, we are pushing. We're still on the third day of the sell. Now, there's not a lot of conviction there either. There's not a lot of hungry to get involved. I did that misspelled. Okay. It happens. So, gold is kind of moving down, and we'll assume we go over to the currencies again. We'll see that the South African rand, right? Where's it at? South African rand. There it is. There it is, right there. And you can see right there the South African rand is trying to move down a little bit, which is kind of positive. So we've really got some real mixed messages going on. I guess more than anything else is with yesterday's holiday in the United States, we'll see it readjust itself over the next couple days. It can't stay like this, sloppy and twisty and all like that. But again, we're also in the summer months, and it does seem to be like, the doldrums just won't go away. And all they talk about is the change of politics. That's all we hear around here is the change of politics. That Biden has to be stopped. So between the two of those things, it seems like we're sleepwalking our way through the summer and into the election at the end of the summer. All right. So from there, we drift over to the Japanese yen. The yen is making like a 25, 26 year high. Let's just go see that up on J4X right there. There. Last time they were up there was, whoa, let's see, one more time, bringing it more and more. There's 2003. We're taking out 2003 numbers right there. So, what was that 2003 to we're at? That's 19 years. I thought we saw something that showed that we were 25 years at 25-year highs, not since the 1994 era. So let's put a monthly up there. Maybe that'll give us a little bit more insight of what's going on. Yeah, that's 2003. Well, either way, I've heard and I've seen on some charts. I will try to find those charts. I think Yahoo might have had it, but at this point we're looking. I know that we're looking at 21-year highs. That's a long way back, and here we do. We keep on marching up. As long as this keeps on marching up, I have my doubts that the dollar can be sold. Because obviously this is a dollar-yen pairs trade, and the yen is losing out. So I have to kind of look at it in that fashion, that as long as we see the yen, which seemed to lead us off in this adventure, then we have to understand that that's where we are at the moment. This product is trying to find a way to climb up. And, there is a headline out there this morning. I'll show it to you. It was from last night, actually, and I was like, wow. And it says, I guess they invested $81 billion in, it's like on the front page of the Zero Hedge at one point there. See, CNN analysts suggest inflation is needed to achieve green agenda. Okay. Was it China? It said $81 billion. Now, I should have saved it. It was like the headline up until like 3 hours ago. Let's see, where's it at? And I'll find it. And another one of those headlines where, Japan, falling out of bed type of thing. I don't see it. They don't have it there anymore. But they spent $81 billion to prop up the market over the weekend. So, $81 billion, not 81 billion yen. So that's a lot of money. There's a good headline. U.S. stock indices steadily thin traded on futures gained steadily in thin traded June holiday. Well, we'd heard that they had to do something. They had to execute some type of, they had to buy the cover. But there was an 81 billion. I was going to post it, and I just thought, why don't just keep on pushing this stuff, I hate reminding bad things, kind of always disappointing. All right, from there we go over to the Mexican peso. Let's see where are you? There it is. There's Mexican peso. We saw that strengthen it the last couple of days, where it went up to the 50 percentile. It's in the weekly buy from last week, and it's in the daily sell. I love when it does that stuff. It always cracks me up. So, the pressure is on. Mexican peso bouncing off the point, was that the 0.23 area? Maybe it'll climb back up to the 50 percentile again, and maybe lift beyond that. That's what I'm thinking, since we're in a weekly buy. I think that the overall trend is probably up in that direction. All right, and that does it. That completes the action in the currency markets. If anybody wants to see a particular currency pair, just shout it out. We'll go after it. All right. From there, we go look at. There's gold up there, so we'll take a look at the metals complex. So there's gold. You can see it's down from Friday. It's kind of sloppy from yesterday. You can't really trust it. Then take a look at silver. Silver doing kind of like the opposite, showing a little strength in here. Been in a daily buy for 4 full days now, or I guess it could be 3, depending on how you want to look at it. But it's been in that long weekly sell. It just refuses to find a way to get out of it. There it is. And so we've been in a weekly sell since that week. Can you see that? Oh, you can't see that. There we are. There we are. Oh, there we go. How has your trading changed since you left the trading floor? Well, we're proactive now. You have to be. Oops, Robin R. You have to be proactive. You can't be reactive. Whereas when you're on a trading floor, you're reactive, or a trading desk. Yo, Robin.
Sorry to bug you, but the October cattle is showing October hogs. Can you send me an October cattle?
Oh, sure, I'll do that now.
Okay, thanks. I'll delete that.
Let's see, October. Say it again one more time.
Oct live cattle
Is showing
actually displaying oct hogs.
hogs. Okay, I'll do that now.
I need
Cattle. Okay, let's do that. So in other words, when there were trading floors, you had bids and asks coming in, from the public and so forth. You had that, and so what you were doing is you were trying to buy the bid and sell the offer. It was a reactive trading environment, and it's kind of when people ask questions like that, I try to emphasize the fact that it's kind of disingenuous. In other words, it's wrong for people to write books saying how I made my money when we don't have that era anymore. There are no real trading floors anymore. Buying on the bid and selling on the offer on a trading floor is also, the bid and offers were wider back then. There were steenths and eighths and so forth. Now they're in decimal, and so there's like trading between pennies, and it's very hard to make money by being reactive because the bid and offer is tight and much tighter, and then there is no real. Most of the public paper goes to is channeled into funds or institutions. They buy the paper. They buy the volume away from the broker, and the broker sells it to the hedge fund or whatever institution it's doing it with, and then it makes it even harder to be a reactive trader. So reactive trading is pretty much gone. On it in the bond market, it still exists because the markets are still wide, and it's not a real listed market. So the reactive in trading in bonds is alive and well and has not died. So you have to trade with more technical analysis, because you have to be proactive, which means you have to decide what you're going to do, and that's a good question, and at the same time, the answer is that you have to be using technical analysis to see exactly what's going on there, and that's the answer to it all in the end result. So I hope that's helped. That's what technical analysis does, is it gives you that I guess you could say that algorithmic nature of bid and offer, whereas many years ago when floors were being traded, they were trading orders off the floors very actively and so forth. You had an algorithmic characteristic of the bid and the offer and the orderly of the market, and you tried to trade that. Now, with that gone, you have the other way around. You have to do the same exact thing in a let's see, where's it at? There it is, right there. So that's cattle. Yeah. So let's just say that's October cattle. There we are. There we go. So that's the difference. Do you see what I'm saying about that? Reactive versus proactive. We're all pretty much proactive traders now, and and I don't want to say that's unfortunate, but it's just part of the recipe of life. That's how it works now, and it's just the way it is. I mean, we knew that when they went to the decimalization, we were going to see this thing happen. We knew it was going to fall apart like that. That's why the New York Stock Exchange sold everything they could before it was all happening. As it was happening, specialist units were being sold. They were like, Spearleeds Kellogg had bought all the specialist units up. Is it possible for retail traders to make money consistently? Yeah, you have to trade like it's past 1976, and not use strategies pre-1976. You can incorporate some of those strategies, like GAN and R and Elliott, and moving averages and stochastics and things like that. You can combine the technical. Oh, let me see what Robin has to say. It's on its way. I just saved it.
I didn't get it.
No, I know. I haven't sent it.
Oh, I need it for him.
Yeah, I know. I'm sending it now. Bye-bye. And so, it's to answer that question best I can, I'd say is that retail traders, if you use the options and the binaries and the technical analysis, you can be just as productive or as well. It's very hard to be as productive as being on the trading floor in some ways if you're just day trading in and out. But you can, if it depends on your discipline and so forth, because we saw people get carried out. See, at one time on the floors, it was really hard to lose money, because money was being thrown at you. When they tightened the markets on the floor and kind of removed the floor people and kind of removed the what's the word I'm looking for here? Let's see. Let me just do this. How am I going to send this? I just need to send this somewhere. Hold on a second. When you remove that, then in the end result is, and that's what really makes it hard to even compare the idea that you could trade like you're on a trading floor. They were throwing free money at you all the time, and the bid and offers, depending on the options and so forth, could be $12 wide. Sometimes they could be as much as $25 wide. And same thing on futures contracts and so forth. They were really wide. Nowadays, they're very tight. And in the electronic market, they're extremely tight. It's easier to trade. Here, let me say this. It's easier to trade as a retail and trader than it was before. It's much easier, compared to back in the days of when, let's see, there we go. And let me just say cattle. So as a trader, off the floor trading is much easier as far as I'm concerned. But it all comes down to discipline and following rules. In other words, using technical analysis, back testing, staying with those rules, incorporating options. Because this way you don't get stopped out. Volatility is much greater since 1976. Volatility has expanded dramatically in the financial markets. There were times where stocks didn't go up more than half a point, or not a half a point, but 0.5% or 1% a year. That's where they invented these bull and bear market points of view and philosophies and so forth. And now, they go up a percentage point or half a percentage point down in a day. They go to up 3%. I think was it Kellogg's, the cereal company's up like 6% today in the pre-market. That type of thing. So, is it easier is it possible for retail traders to make money consistently? Yes, it is. But you have to use the tools that have governed the market to begin with, and that is when it was just a tape and you only could buy or sell short or sell long stock, you had a much less volatile market, and you had wider bids and offers, and that was that market. After 1976, with the listed options market and then the creation of index futures and so forth, going into 1980 and like 82, 83, I guess it was 83. It's a different form of market. It's not the market that everybody likes to write about and tell you how much money they made. It's a market. I've had some really great trades, throughout the decades, off the floor. Had an options trade. It made almost $67 million. It was investing $30,000, made almost $67 million. It was like $66 million something and change. And it was like a 3,000 lot. I'm trying to think what else. I was running the short side of a portfolio for a hedge fund for a couple years, and made a couple $100 million off of that, leaning it up against their portfolio. So it's easier to trade off the floor with technical analysis than it was before 1976, and using options and marrying them with the underlying product is a much easier market. It's cheaper to trade. It's much easier to trade. There's more data coming in. So I have a very comfortable saying that. But if you think you're going to trade like it's 1972 off floor, no, that's not really reasonable at all. I just don't see that as reasonable. Now, if you're intraday trading it, it's okay. Again, you have to follow the discipline and the algorithms and so forth. You have to have good tools to be that proactive. But my battle all the time is I keep on telling people that they trade like it's 1970, like 1975. They don't trade like it's 1976. So in other words, for the last 46 years, the markets have changed dramatically since the creation of listed options, and they're fantastic tools that allow you to secure your assets and at the same time reduce your risk and at the same time increase your gain. So I hope that answers the question there. No God. How about now, Robin? Are you still there? Just send on the chat line if you got it. Let's see what's going on here. Okay. So I think that has been my complaint. I say it a lot here. I say that people need to use options and binaries way more. They don't need to take the risk that they have been taking for so long. And it doesn't make any sense to me why they do. Okay, good. Do you recommend some books about new style of trading? To be honest, I don't read any books to really tell. I'll recommend this. John Murphy's book on technical analysis. Read what you can about W.D. Gann. Read about what you can read about R.N. Elliott. Trying to think what else, and then look at take some free subscriptions to different technical analysis groups and see if they offer free analysis. Try them. If they want to charge you, don't. Test them for free for a while. We do that for Chicago Quant Technologies. We let people have like a couple weeks free, and they can see what the tools are like. But I mean, that's really what it comes down to. Is that I think that you have to get more schooled in the old technical analysis, and and here's the last book. This is the option side of it. Options as a Strategic Investment by Larry McMillan. And my recommendation always is the same, and that is buy the old books. Don't buy the new books. I'm sure that once you get comfortable with options, and buy the 1980s books versus the 2000s books. Because I think that'll help you out. But I wouldn't worry about reading something about 2000 because options have really not changed in any particular way. They're still a bid and offer. If anything, they've tightened themselves up. Like I said, options used to be $6.50 wide, or $6.50 wide, $6.50, $6.25 wide, and or they could be $12 wide, or they could be $25 wide, and so now they're a penny wide, and so you can buy a call between a bid and offer sometimes for a penny. Now, if you get into illiquid stocks, of course you're going to have problems. So the trick is not to be in illiquid products. You have to trade things that are very liquid. I hope that helps. So Larry McMillan, options as a strategic investment. And in those technical books I talked about, John Murphy's History of Technical Analysis, R.N. Elliott's work, and W.D. Gann's work, and that'll help you out a lot. I hope that makes sense. And since this is going to be this is going to turn into a video. Yeah, I trade. So this is going to be turned into a video. I myself like to lean into the stock indices because they're the biggest and the most liquid. And when you go out the door, you can see where they're at. If you're trading an individual stock, if you can utilize options on individual stocks and so forth very successfully, and use them for dollar cost averaging in and hedging when things are. We were recommending, was it 4 or 5 weeks ago, to put collars on that the markets were going to take a dip. And, we did. It did. Let's see. Let's show you the stock indices. There is, right there. There's the S&P. So you can see in our work, we've been in a sell since back in here in April with the S&P 500 trading in the 4,500 area, and we went into a weekly sell, and then then we use these dailies to do shorter term trading, and you can see here, it goes back into a buy and it pops up on a daily, but the weekly finally pops up into a weekly buy on this week, and then goes back into the sell this week here, with the daily jumping into the sell, warning you not to be long anymore. So, over this time period, the markets have been, 3, 4, 5, 6, 7, 8, 9. This is the 10th week. We've been in a weekly sell 9 out of the last 10 weeks since the 4,500, 44 to 4,500 area on the S&P. We can show you our intraday tool that we use. Here's the intraday. And this is the S&P 500. When it goes into a sell. Whoa, what did I do? Did I move something? Let's move this again. Like that. There we are. Well, we can make it even bigger. I use this one down below for certain characteristics, and then I do this one. And so when it goes into a sell right there, you can see the product goes down in value. You can see it pops up here. It tries to be in a buy, goes in and out real quick, and then again, and if you use the right way of using stops and so forth, then again you can see another good intraday trade where it goes into the short here. There's the short. Short's right there, and you can see it doesn't stop until there. There's a long right there, and you can see it vacillates in and out a few times. If you use stops, you're making definitely more on the downside than, or upside. You're on these trends if you just manage it and not just suck it up. In other words. And so that's our intraday system. You can see it right there. We're now going into the sell as we speak. But as the time manifold, see how the time manifold's getting tight here? That's that blue mirror image line. When they get tight, we like to kind of let it play itself out first and then get going. In this case here, you can see it's really getting tight. And so we're trying to get into a sell. It hasn't happened yet. We'll widen it out more so you can see. You can see it there. It's just flirting with a sell as we speak. Also, the markets open up in 10 minutes, so there's a lot of choppiness at this point. So you can watch this webinar over again. Tune in the last the last half hour, and last like say about 5 minutes ago, we've been answering the questions for you, and you'll be able to write those things down. I'll say it to you one more time slowly. For options, Larry McMillan, one of his older books, like in the 80s, early 80s. It's called Larry McMillan Options. Or Larry McMillan writes it. It's called Options as a Strategic Investment. And then John Murphy, The History of Technical Analysis, or the Encyclopedia, or I changed his names around. I think John is gone now. Good guy. And then from there, read what you can about R.N. Elliott and W.D. Gann. Elliott Wave Theory, and Gann and spirals and so forth. So, and Fibonacci, it all will be blended in with the Fibonacci sequence, or the golden rule mathematical formula. All right, let's see, what else can we say? So what has it done? Okay, so it went into a sell there. Okay, so makes a little money, but it's hurting us more than helping us, and we're getting a volatility signal of a red and green dot. So we'll wait and see if this turns down, this little dark dashed line here. If that starts to turn down, this thing's going to roll over and probably go after this lowish area there. And we're watching and seeing. And obviously, the longer the hesitation goes, if there's a profit in it, I will take the profit and go. And have a stop out there in case it takes off. I'll just wait for the next trade to come around the corner. And that's how we do that. And this particular time of the day, there's times of the day where I don't get involved, like the first 5-10 minutes, going into the last 10 minutes before the market opens. Things like that. The last 15-20 minutes, the last 20 minutes of the trading day, steer clear of that. There's points where it's just too noisy to want to try to trade it. But I have no problem looking at it and saying this is what the math says, and then we follow it. That's the way it goes. We've had plenty of wins to always compensate for the losses, so that's the whole key there. And it looks like it's still battling, trying to lift up again. We do know coming in today that that because of the option expiration on Friday, that there was going to be a short squeeze. And that's what we're seeing now. Now, if this closes right here, it's time to cover it, and it does. So it's time to cover it. And now we're flat, and we'll wait for the next trade. And we took probably like a point and change loss. And more than likely, I wouldn't be trading this at this particular time. Like I said, about 10 minutes before the markets open, and the first 10 minutes can be extremely volatile. We can show you that, show you how too much action. It just executes so fast that it has to be all robotic at that point. And you can see even the buy side is having its problems trying to get going. All right. From there, let me think. What else can we talk about? We were looking at the metals, right? And I saw copper perking up. Let's leave that up there, and we'll just use J4X. So we'll go like this. And there is. Let's show you what copper's doing this. Let's show what silver's doing this morning. There's silver. And silver's acting pretty firm. We're in a daily buy on our work here. We're going to just show you real quick like that, and then we'll go back to that for you. You see it's been a daily buy for a couple days and still flirting with the weekly sell. And then copper. Let's put copper in there. And there's copper. This morning it was acting relatively firm. You can see the green line is up above the dashed, but still a lot of red. And then at the same time, let's just do it right here. Right there. There's copper. And so you can see copper's trying to lift up here this morning. Trying to get some buying in there. And still waiting to see a clean buy signal. We have 2 out of the 3 things all lined up here. This is above the 0 line. This is above it, but we keep on getting red dots and red or green dots at the same time, both of them together. So it's not a long until it's an individual one. So we'll see if this rolls over again, and maybe this will be the better short. So the short that was here didn't last long at all. And it went below it by a very little and then covered it off of this one right there. So now it's trying to push us back into that short a second time. We'll see what happens there. What's my favorite? Let's see. What's your favorite part about trading? Probably options more than anything else, is because the risk factor is really low when used right. I mean, you can build all kinds of things with options. You can try to trade and lock in a small little profit here or a profit there. It's options are, and it's really a healthy thing. You can do it, when you're 20 years old, and you can do it when you're 90 years old, and it can increase your income through dividend stocks and so forth. You can protect those dividend stocks with collars. And at the same time, you can go sell, call spreads above and take in extra money. There's all kinds of wonderful things you can do. Whoop, there we go. We're trying to get into the sell again for the opening of the market. Looks like it's going to confirm another sell. It's really tight here. You can see how tight that's become. So it's nicer when it's much wider. It's more accurate. When it gets tight like that, it just shows you that it's going nowhere. It's meandering. So yeah, I think what's my favorite part of trading is the options. You can set up all kinds of strategies with options with very, very small risk compared to just nakedly trading. Especially in a stock market since the late 70s now that can move in great clumps and great size. And that's something to think about, is that that the fact that the markets are way more volatile than what people write about, and the tools that were developed are the tools that the options market made the stock market more volatile. Okay, it's still not in a sell. So the fact that the options were the nucleus or the conception of the increased volatility means that you need to utilize the options correctly to compensate for the problem that they created. I used to get scolded, I guess you could say, by the old New York Stock Exchange members. They'd be like, "You young option guys, we traded 11 million shares a day and we made great money. And now, we're trading 100 million shares a day and it's hard. And you option guys, have got the stocks going all over the place, crazy, making no sense." So they used to say that to me all the time, especially at lunchtime or something like that, or walking to the train or walking back from more in the mornings. It was more like, you didn't hear that garbage in the afternoons. You only heard that in the mornings when walking with somebody that worked on the main floor and I'm trading the options there. That's why there's no side-by-side option trading. They made sure that there was no side-by-side option trading because they were paranoid that the New York Stock Exchange would take over options market and really manipulate it. I mean, the New York specialist manipulated the market. Okay, there it goes. It went into a sell again, and it's bouncing back up again. Now it looks like it's going to close in a buy. This might be the real buy that I want to go after. But again, it's 13 seconds before the stock market opens. So This is going to be here. It's going to be very fast. In another 12 seconds, you're going to see this thing starting to jump all over the place. Here we go. Put on your helmet and your seatbelt. There we go. So it's in the buy now. It's been in the buy since right there. It went up just 2 points. Now it's 3 points up, and it'll take nothing for them to find a way to go down. And you can see the action is going on there. Let's see when it goes into a sell. Let's see what it does here. There's a sell. Let's see when it closes. It's in the short. Let's see if it stays in the short. And goes down to, say, 36 again. Makes a couple points. That's why you take fast profits. Especially in the first couple minutes, first 10 minutes in one direction before the market and 10 minutes after the market. So that was very short-lived. A short there, and it went just down 4 bars. Made maybe half a point. Now it's back in a buy right there. And not really going anywhere from that one either. Look at how flat it is. It's like you get rid of it and start over again. And then now you can go into the short. Let's see if it'll take it down to the 36 area now. Very tight for alleged volatility. And again, it only went down a point. So it's very tight. That's what our time manifold here shows you. When it gets that tight, it's even worse. Oh, there you go. There was a good buy right there. Let's see how it looks. There's the buy right there. Look at that. 3 red and greens together holding off. It's very volatile at the moment. And it's just a 2-point move up to, was that 41.50 from a buy at pretty much around 40 3/4 or 40 and a half it is. This is a 1-point gain. It's not actually really going anywhere. We're already up enormous amounts, I guess you could say, at this point. Let's see if they still in the buy. It's still climbing. So if you're playing this, if you're trading this thing, it's still giving you the buy signal. And it has gone about almost 2 points now. All right, we're going to get out of here. I hope this was good enough to, we're going to talk about this again. I think I will label this as, we'll label it as a way of understanding the markets, modern markets, and how to trade them. How about that? That's what we'll call this. Modern markets. It's the S&P modern markets and how to trade them. Something like that. All right, traders, happy trails to you until we meet again. Happy trails to you, to all our trading friends. There's a good short. Check that one out. There we go. That is a 2-point move. It's really tight. For all the volatility, we're not really seeing any real wide action. Thank you very much. All right, guys, we will catch you tomorrow. Same time, same channel. Take care. Bye-bye.